On the phone with us now is one of our regular contributors, David Morgan. Jason, would you mind introducing David to the listeners?
David is the silver guru. You can learn more at silver-investor.com. He's one of the nation's leading experts on gold and silver investing. David, how are you doing?
I'm doing excellent, thank you.
David, so what you read on the markets right now? We've seen a little bit of pressure on gold and silver. Now, I did dabble in both of them during that little period of weakness. You think that's a good move?
Yeah, I think you got to be patient here. I think accumulating in this range, I think, is smart. But again, I think you have to have a longer-term time horizon. We've been in a large consolidation period since last year. We peaked in the metals with silver about May 1st of last year, at the end of April, and we peaked in September for gold above the $1,900 level. And since then, both the metals have been weak and consolidating, and I think that's going to continue for a few more months. A lot of my colleagues in the industry are calling for a bottom here and up and away. I don't see it like that.
David, let me ask you this. Now, I know neither one of us want the SLV for any long, other than perhaps a quick trade. It's not a vehicle to store wealth into or to preserve wealth. But I've pulled up the chart of the SLV, and it's a sloppy chart from a technical standpoint. It's an untradeable chart.
Agreed. I mean, I call them indecision patterns. If you can't make sense of it, it's better to use the old adage, when in doubt, stay out. The only other thing you could do would be place some kind of a sell-put strategy, which is pretty sophisticated and below certain levels of support, if you're willing to hold the position. But that probably is a better discussion for another day.
Well, now what I was doing I'm still saving most of my powder for hopefully a more substantial decline in price, just so I can get one more bite of the apple.
I think that's a good strategy. I employ it myself. I mean, I don't want to be too tricky here, but I wrote an article in Futures Magazine several years ago and asked me how I traded, and it was called Spiked, S-P-I-K-E-D. Metals especially have this tendency to do a spike high and a spike low. I mean, if you look at, again, last year in silver, that parabolic move from basically the $35 level to the $48 level in a matter of, several trading sessions, that's a spike high. I've seen it too many times. I was worried about it. I thought silver was ahead of itself. I called the top and got out of my trading position. They also tend to spike low, and we've seen that twice in silver where it's hit the 26 and change level very briefly. Didn't close there. It just traded a few contracts in that range. And if you're really prepared and you're, 24/7 watching the charts or watching the price movement, you might have been able to get something in there. But the point is succinct. It made a spike low. I'm looking for another one of those spike lows. I don't think it's going to be 26. I think it's going to be probably under 30 somewhere. But I agree with you. If you are lucky enough, I'll say, to get in there on that spike low, that's usually how these markets turn around.
David, I was corresponding with a listener last night over in Texas who said he was throwing off about $250 a month he wanted to devote to the metals. How do you go about doing it? And I thought I'd ask you that question.
Well, I'll tell you, just so you know, I'm involved with this program, and it's a silver or gold saver program, and it's an accumulation program that I find to be one of the best out there. If you go to silver123.net, that's silver123.net, it takes about 5 minutes, 10 at the most, to set up an automatic debit from your checking account, and you get the real metal. These guys are the real deal. I've known them for years, and they just ship it to your house. On the other hand, if you elect to store it, it's stored in one of the best storage facilities that I know of, but I still recommend people take it. And, of course, there are people that live in apartments or travel a lot or certainly don't want it, in their home or whatever. So obviously that's our option. But it's a great program, especially if someone wants to consistently put money in the metals, which really is the best way for most people.
All right, let's talk about the silver123.net.
Correct.
All right. Now, in the old days, you'd run down to the local coin dealer, and you had to be savvy enough to know that, well, in the old days, the junk was going for 4 times face, and this guy was trying to get 5 times face. And so you couldn't just send people who were newbies in to see just anybody because they'd take advantage of them. I would assume silver123.net, are they trading junk? Are they trading eagles? I mean, or they run the gamut?
They run the gamut. Basically, the purchase price is based on bullion plus the dealer markup that's as competitive as anyone else. But on the when you actually take possession of it, there is a variance, and it's only understandable if you understand the markets. And we did this, Alan, on your show before. Where if you're going to buy Eagles, when you take your silver out, you're going to pay a higher premium because Eagles cost more to the dealer than a silver round or a chunk of metal because of the manufacturing and the markups that the dealer themselves have to pay. So they're on the up and up. They're not, but that's where you actually find the true cost, not the true cost. Let me restate it. When you buy it, you're buying bullion. When you take it out, depending on what you want, if you don't want bullion and you wanted Eagles or you wanted rounds or you wanted junk or you wanted some other part, some other item in the silver space, then that will affect the premium on the when it's delivered. So.
Well, I know sometimes we're covering conquered territory, but not everybody's listening all the time, except for maybe Jason's parents and my parents. So, I'll get questions like, well, hell, I just asked him that 2 days ago. Weren't you listening? He goes, no, I had to take a phone call or something. So sometimes it helps. The repetition helps. And for this listener out there in Texas with the $250 a month, $250 a month, would junk on Silver 123 be the way for this fellow to go?
Well, this is his choice. I think that it's still the best bargain out there, easily recognizable, still paying around melt for it at most dealers. So it's a good value. It's recognizable. It's small units. Really adds up to everything I like.
David, we only got a minute left, but I did want to ask you, this show we've been talking a lot about the coming election, the presidential election, how it might impact the economy, how it might impact small business. Do you have any thoughts on an Obama or a Romney victory and how that might impact metal prices, or will it have an impact substantially, do you think?
Well, my statement is consistent. It's like changing the captain on the Titanic. The Titanic has already hit the iceberg, so whether Obama gets back in or Romney takes over at the helm, I don't think it matters in the long run. Short term, if Obama gets reelected, I think it'll be very bullish for gold after the election. If Romney gets in, I think gold will have some kind of pullback for a while, but longer term, it matters little.
I agree with you wholeheartedly. Jason, tell him one more time about David and his services.
We've been speaking with David Morgan, one of the nation's leading investors on gold or leading authorities on gold and silver investing. You can learn more at silver-investor.com. There's a whole host of information out there for anybody who's serious about investing or trading the metals market. Go to silver-investor.com.
David, I saw you were with our buddy Jay Taylor this week.
That's right. Yeah, Jay and I go back a long history. Jay's a great guy.
Yes, he is. David, it's always a pleasure talking to you.
My pleasure, Alan. Thank you.